Welcome, everybody. We are in a topsy-turvy market, so of course I had to bring Adam Mesh back in to explain to me what's going on right now and how to possibly make money from it. So, Adam, how are you doing today?
I'm great, Mike. How are you?
I am.
You hear me okay, by the way?
Yeah, we can hear you just fine. Yeah, I don't know. I find myself a little confused because it feels like every 10 minutes there's another piece of crazy news hitting the tape and stocks are bouncing all around like crazy. So, again, you know, Adam came in to explain to me, since I'm like a 2-year-old, what is going on. And by the way, guys, Adam is hosting an options trading webinar this afternoon. There's a link in the description down below. Click on it, and you can sign up to join. So, Adam, I want to.
That webinar is. I think it's pointed out. There's nothing for sale there. It's all content with Tom Sosnoff, who founded Tasty Trade, sold it for $1 billion. Awesome interview.
Is he giving out like some of his $1 billion to everybody who shows up?
This is $1 billion advice, $1 billion education.
Yeah, I think it's like it says a lot about Adam that somebody like Tom Sosnoff sits down with him all the time to discuss trading. So guys, definitely sign up for that. Like Adam said, he's not selling anything, so you guys can just join up to learn how to succeed in a market like this. So I think the big question, Adam, on everybody's mind is how to handle all these ups and downs. Because like I said before, it feels like every 15, 20 minutes, something crazy is happening. The market crashes out, then it comes right back. So how do you deal with an environment like this?
I mean, well, let me start by saying this is different. What we're speaking to right now is very different than a passive investor. You know, we're not discussing like what you should do with the Amazon that you've had for 10 years in a market like this, or you've been in NVIDIA since before it split and now it's moving. Like, that's not what we're discussing. We're discussing short-term momentum opportunities. And for professional traders, it's the equivalent of, I say, surfing. You know, anyone could go out and surf in little waves and try to learn how to surf. But when the waves get really crazy, that's when the pros can't wait to get out there and everyone else stays in. And what we've been seeing this week is those waves that you dream about. So like I had a physical therapy, like I do like stretching. And it was the first time I haven't been in front of my computer this week at all. I've been making over 300 trades a day. The only reason I left today is because he said, "Can you see me?" And I'm like, "Yes, it's slow. I could see you." And still I had some Qs that quadrupled in the hour that I went for physical therapy, and that's slow. And when I say Qs that quadrupled, I bought the 495 calls for $1. Let me see it. Yeah, I bought them for $1.59. The 495 at 11.37. I went and did physical therapy, and they were trading at like $4, and that they hit $5. So, and that's slow. But yesterday was insane. The day before was insane. Just what I find difficult, maybe someone could help me with this, is to hold. You know, what's crazy is this. So I was going over this. So I came in yesterday. I don't like to go out with this. I like to respond inside the market. But on Monday, I got a little bit stuck. At the end of the day, that last move up, I was like calling BS, and I was buying puts, and I just couldn't bring myself to sell them. But I don't like when I make an overnight bet, a big overnight bet. But I own the 493 puts in the Qs coming into yesterday morning. And I had enough of a size, and I knew it was literally either up or down. That's like red or black on a roulette wheel. I have no, like, yes, I think we're in a generally weak market. And if you're going to take risk, it should be to the downside, not where we are right now, but overall. And so I had this position on, and I was like, oh, I hope I just don't rip up my account for no reason. Came in, market opened down. I was up like $5,000. Okay. If I held those puts to their maximum potential, I would have made 25,000. I sold them for the 5, and by the end of the day, they were worth 0. Likewise, I bought calls in the Russell, which if I held to their max potential, I bought the 208 calls for the IWM, and I had an average price of like 15 cents. Those I think I broke even on because because I averaged down. I started buying them at like 45, 50 cents, and then it went down to like 8, and I bought more. And so I think I broke even. Maybe I made like $5,000. I don't know. But those things were worth $50,000 if you held to their max potential, and they expired worthless also. So both long and short, you had these massive opportunities, but if you held too long, they were worth zero. So knowing how to, I don't know. I think.
So, I mean, so is this an environment where you basically, because it sounds like what you're saying is you have to like let go of the FOMO and just, is it okay to just take a gain because it's there?
So this is what I came in with today. I came in with the idea that I really don't know where we're going right now. Like, I think the Qs could work their way back up to 510, but they could also continue to hit new lows. So I was like, I'm very on the fence, which I was happy about. That means I'm not going to take big size. So the key is you want to be active. If you're a pro and you want to make money in this market, you want to have positive drift, be making decisions, but small is the key. The reason why I said I could have made 50 grand, 25 is my positions were too big for a market that's moving this wild and this fast. And so what I tinkered with in my strategy that I thought would be more effective was like, I could have made 5 grand trading 10 contracts. I don't need to be trading 80, 100, 200. It's too much. So today I traded smaller size and it was more under control. But you could go in and out and surf these moves and just scalp all day, which is something that a lot of people haven't seen for a while, which is fine. And who knows how long it will last? That's why I'm doing it. It could be done by next week. But
so do you like this trading environment?
I love it. This is what I grew up in. This is how it used to be all the time, and now it's rare. But yeah, I love this environment. What does everyone else think? I'm just curious if other people like the environment.
So what we're hearing from people are definitely frustrated in our audience because these are the kinds of things we hear that people they feel like they're always selling out at the bottom or they're buying minutes before some giant headline hits.
Yeah.
I mean, so do you think this is a time where people should sort of, keep some powder dry, waiting for opportunities?
Well, it's an interesting question. And for the people that are frustrated, I'd be curious whether they're sitting there all day. Is this people sitting there all day, or is this people that are like buying it and walking away for a couple hours and coming and if they're all there all day, the way you set up the trades with your risk reward will determine whether you stay in it or not. Like when you're trading options, the beauty is like some of my options like could be down worth 5 cents and then worth $2. So it's not hard to stay in them because they have no value left. And then they come all the way back to life. So I'm setting up my trades where my bottom is not that far away. I'm not buying anything at the money. Like even right now on what's the slowest day of the week, the Qs are $4.99. If you want to go on either side of the $4.99, it's $2.20, which actually isn't so bad. But like I'm probably buying like if I thought we were going up, I'm maybe buying the 503s, the 505s. If I thought we were going down, I'm probably buying the 495s. And so my risk is going to be 70 cents, 80 cents on a trade. And if we catch a big run, I'm going to make $3 or $4. This is the market to be doing that. Most of the time, it's not.
Okay, now are you doing these trades? Are you mostly like trading the index ETFs like the Qs? Because we see stocks like Palantir, Tesla, Nvidia, those kinds of stocks are, they're flying back and forth. So what are you, you said you're doing a few hundred trades a day. Like where are you concentrating those trades?
So here, I could bring up, you want to share my screen real quick? Or
it's up. It's up.
Okay. So like if you look on the Qs today, can you see on the right, this side? So this is from here. If I go the last 7 days in the Qs, you want to see something?
Sure.
I mean, it's mostly the cues. I mean, that's just like, I'm like, the positions are crazy and the cues in and out. But like this last trade I made was I bought 8 at 495 calls at 1137. Immediately I was like, oh shoot, I have physical therapy. So I sold a little, so I only had 6. Sold some 228, sold some at 374, sold some at $4. Done. And a lot of that is that. And the reason why I, in this market, will trade the indexes versus a stock is because if you have a feel for the market and you're right, you're going to get paid off. But if you trade an individual stock and it doesn't go with the market, that is really frustrating. So let's say you're bearish and you're buying puts and all of a sudden everything's going down, but you're in Palantir and it's not. Well, now you were right about the market. You just chose the wrong stock. So I'm leaning towards trading the indexes for market plays. But if there is an individual stock showing strength, then I might do that as a longer term trade for something where I'm going to hold. Like I like the way it's trading in the down environment. I think this is something I want to be a part of. And so there's 2 different kinds of trades. One is the active in and out trade. The other is the more like, hey, let's be in this for a couple of weeks, you know?
Okay. So people, just so people out there can understand your sort of, your mindset when you're trading, are you coming in with, like each day, do you have like a bullish or bearish bias, like overall, like how far are you looking out?
I came into the week with, first of all, day by day is how far I'm looking out. I came into the week with a bearish bias. We've come down a lot, and now I'm kind of neutral. Now you could sell me on why we're going to go up or down today. And so, yeah, the question was, you're scalping markets and not stocks. In this environment, I think it's a market play. So why not just trade the markets? Now, sometime the NASDAQ might go a little bit too fast, like the Qs, and so the Russell, which is unrelated to the Qs, other than it's another index though. The Qs for me seems to be the leader. It seems to move first. Like if tech is moving, then things will follow. So I'm watching the Qs, and if I miss the Qs, I might quickly grab the Russell if I believe the move is for real, because it's a little bit slower and my reaction time is a little bit better for that.
Okay. Yeah. So I do think that this concept of, so are basically like what % of your trades, because I'm wondering if this is like an 80-20 thing, like is something like the Qs accounting for 80% of your trades?
Yeah. Yes.
Okay. So why
Qs in the Russell?
Okay. So then
otherwise I'd be making 20 trades a day.
I mean, would that be worse?
Well, so for this week, I've been right on the indexes. I've been trading them well. But like yesterday, I made, I think, like $8,000 between the Qs and the Russell, but I wasn't up 8,000 for the day. The positions I'm holding were down. And so like I'm kind of able to hold those positions, and that's why I don't mind even if I lose a little bit on the bearish side, because I'm long in general. I'm not like a bearish trader where I'm going to own big. Well, I'm never naked short, but I'm not trading. I'm looking for upside stocks almost all the time. So if I do anything bearish, it's going to be the market. And if I'm wrong, at least my stock should be doing well. But right now I've taken a beating in my positions over the last couple of weeks, and I don't even have a big example. My positions have definitely gotten hit. And I've offset that with index trading, but my hope is that, you know how like sometimes you just get these overnight moves that if you're not in them, you miss the month, So my hope is that the stocks over time are going to come back and I'll make all this money back. And that's when I'll really feel the value of what I've been doing this week, the work I'm putting in. Because in P&L wise, I'm not up a lot for the week. But I'm trading really well, if that makes sense.
So you mean you're executing correctly? It's just the ball's not landing for whatever reason?
Well, you mentioned earlier Core Z, right?
Yeah.
And we had that on the call, and it did really well afterwards, and I made money in it. But I was looking for a bigger move in that, and I stayed in it, and I went from up 3,000 in that to I'm down 4,000. But like, I mean, I'm loaded in this thing. Like to be only down 4,000, I'm buying it at the lows of its day constantly. Not the low, but I keep buying it as it starts to look strong, and it's been trending lower, so it's not been an easy trade. But I'm psyched right now that I'm only down $4,000 with I have 56, 81, 15, 16. You know, between options and stock, I have the equivalent of 18,000 shares through April. So if this thing makes like a $3 move, I mean, I'm golden, and I've absorbed a lot of punches because of the market and everything like that. So that's why I'm feeling pretty good. Like I've taken a couple big shots from the market on the chin, still standing up, ready to go with my positions intact. Like I haven't hit that button where I'm like, I'm just out of everything and I give up. Just the opposite. I'm like, okay, is this all you got? I'm still standing here. I'm trading you well, you know?
Okay. So with something like Core Z specifically, so obviously you're very bullish since you have all this exposure. Do you know when do you know, like, I guess because people love to talk about position sizing.
Right.
How do you know when you're too big?
So with Core Z, if you bring it up, I only have 1,800 shares of stock, which is the majority of the money. That's $19,000 of my risk, and it's a $9 stock, so I'm not so worried about that. The rest is in options, and so it's a stock this stock was at 16 like probably a month ago. Now it's at 9, so it's lost half its value. I own the 11s, 12s, 13s, but my risk is only a couple $1,000s. But if this stock makes a move back towards 12 or 13, I'm going to make 20, 30 grand on $3,000 risk. I'm going to 10x my money. I like the position I'm in with that. I'm feeling good right now with where I am. It's a good day for a call. Gil asked about a government shutdown next Friday. Would that keep markets bearish? The government's not shutting down. You know, especially because we have a Republican controlled everything. So they're not going to let it shut down. I think the only time you would have a shutdown is if it was a House divided and they couldn't agree and they wanted to get what they want, but they won't let the president be faced with a government shutdown. So I'm factoring that at 0. And even if it was shut down, what would we be shut down for a day? They don't want to be in that position where they're not allowed to leave. You know, they're not allowed to go home, and the whole country starts to hate the government because it's shutting down and buses aren't working and stuff like that. I don't factor that in at all.
Yeah, I mean, it feels like we're at the point where the threat of a government shutdown, it almost seems like tradition. You know, they just even if it does happen, I think people just assume it'll open up next week.
Yeah, I wouldn't make any trade based on the potential of a government shutdown.
Okay, now, so let's talk about politics.
Okay.
Since it's coming up now, do you think it's a plus? So, we're talking specifically about the active trading universe here. Now,
we're not talking about our political beliefs.
We can. That's obviously we will, guys. We're going to be talking about the death penalty and some other key issues in just a few minutes. So stay tuned.
I will say this. I have to say this on my mind. It really bothered me yesterday. I understand the whole thing about not clapping for the president and you're on your side. I love when he was like, "You guys, is there anything I could say where you guys would clap for our country?" But what bothered me was like, they announced that the hostage had been released, that they had got a hostage home. He had promised the 95-year-old mother that he would get this hostage freed, and he did. And they said, he's here tonight. So now we have a freed American hostage, and they still didn't stand up and clap on the Democratic side, which it was like embarrassing. And I feel like I could talk comfortably about politics because I was a Democrat for most of my life, and then I switched, and now that I've switched, I'm like looking at myself like, what the hell was I ever thinking on the other side? Like, what an embarrassment. But I pride myself that I was able to see both sides, but I don't understand not standing for a freed hostage. Like, what are you doing? Anyhow, sorry.
Yeah, I do think on either side, there's always some kind of an inappropriate posturing. You could say last night's might have been worse, but I feel like
the paddles. I thought it was just embarrassing. I really did.
I don't know. I feel like it's I feel like it's revealing our inner selves in a way. But I mean, but the real issue I brought up politics is specifically because.
Tariffs?
Because of the way Trump operates, which is basically shake the table and see what happens.
Right.
And so now all of a sudden, like, who the hell would have guessed that 12 months ago, like headlines from Canada would matter? But yeah, it's like, we have all these tariffs, we have multiple wars going on, Doge. I could list about 50 things, but do you think it's good for active traders that there's this chaotic news flow?
Yes. But I will add this, and let me say this. Let's talk about situations that have probably happened to people, and this is where people would be frustrated. Okay. On Friday, was it Friday? Yeah, on Friday. I don't remember what day it was, Thursday or Friday. They were bringing Taiwan Semiconductor on at 2:00 to announce their investment in America technological infrastructure. And as they were switching to the news conference where they were going to have the leader of Taiwan Semiconductor on, I bought calls, and the market shot up. Like, I bought it as soon as they're like you saw the screen change on the TV. I'm like, oh, they're waiting for the number. And I expected that was going to be short-lived. But then I didn't expect them to use that as almost like a Fed announcement catalyst for the market to then sell off like crazy. We had a mad sell-off on that. Like, it was just waiting. And that's where they mess with you a little bit. So let's talk about that. Let's say you were bearish. If you were bearish and all of a sudden it shoots up and you get out, you're like, I don't know what's going on. Oh my God, Taiwan Semiconductor, they're announcing investment. I'm going to switch to bullish. And then the market tanks. Now you're sitting there whiplash. Like, that's frustration that you're talking about with traders, where they're completely frustrated. What you want to do in that situation, okay, first of all, if you're trading options out of the money in a market like this, your risk is limited. So you don't have to get out of these trades. They're going to be close enough to zero where you could just hold them. And then what happens is, if you want to go long, you can buy some other options. And if you're wrong, at least the other ones come back up. Versus if you were doing something else, you're just completely getting whiplashed. But what you don't want to do is do that complete reversal, because the market's going to show you most of the times where it wants to go for the day. And when you get these quick, jerky announcements, like there was a number at 10 o'clock today that sent the market up and then right back down. You don't want to overreact and panic to get out. You might want to wait a second and say, okay, I missed my exit. Now let's see it settle and see what happens next. So that's a really good thing. Like, if you miss your exit on a trade, or you miss your entry, don't panic at the next level to get out or in. Wait for a second, let the market settle, because a lot of times what we're seeing is it comes right back to where it was anyhow, right? We're seeing that back and forth, so you don't want to overreact. But the most important thing to do would be to be light. If you are light, you're not going to have a problem, and you'll get a better feel for the market, because you're going to be emotionally controlled. If you're trading an amount of size where you feel very comfortable, you're going to do well. If you are trading over your skis, that's where you can't react quick enough, and you get kind of put in a bad position if things are going against you.
Okay, so would you say it's better for people to hold more cash and be ready to jump on things?
Oh, one sec. Sorry. This is my daughter who I was waiting for a call. I'm going to mute myself for 1 sec. Sorry, it's very important.
Okay, it's okay.
One.
You're muted. Okay. Guys, quick commercial break. Adam is hosting a webinar this afternoon click on the link below. You can join Adam, and he's giving a free options trading lesson. Nothing to sell, nothing like that. So make sure you click on the link below. And Adam should be back with us. All right, Adam, you're back?
Yeah, sorry.
Okay, no problem. Okay.
Away and she had told me to wait for a phone call.
All
I
right.
had a lot of emergency breakthrough, so only she could call me.
Okay. No problem. We understand. Okay, so back to what I was asking you. Is it better to just hold more cash and wait for things to happen rather than trying to predict what's going to happen over the next day, week, month?
When you say hold more cash, are you talking about investing, or are you talking
Let's
about
say
trading?
for active traders, let's call them active.
It's better to be lighter than you normally would. If you normally trade with 1,000 shares, you could trade with 400 and get better results because the market's that volatile. You're going to get paid out, but you want to be flexible and light. I think it's relative to everybody, but if you're trading with big size in a whiplashy market, your P&L swings might dictate you to make emotional decisions versus like if you have a feel like, we're going to go up, but you can't stomach the volatility to get paid out on that. That means your position size is too big. So I don't think it's really waiting with bullets on the sideline. I think it's more just committing to being light and if you're actively trading going in and out. If you were looking to invest or put on a position, at that point, I would say to you, yes. So if you want my longer term outlook on the market right now we went up an incredible amount. It's not surprising at all that we've come down. Okay. I'm pretty happy. Am I like real investing? Not the account I trade, but like where my money is sitting, like on the day where the Nasdaq's down 2.5%, I'm down 0.4. Because I was already lightened up into this. The world makes sense to me when the market goes down. That's just how I'm built because it's
okay.
Just
why? Tell us why, because that's an unusual statement we don't hear often. So what makes it make sense to you?
I think I'm like, I wish it didn't. I think younger people that haven't seen market downturns are more quick to buy the dip, which has been the right thing most of the time. But for me, who saw the internet bubble burst, who saw the housing market crisis, who've seen markets where the bid's falling out, and you look at it and you're like, it has to be a buy here, and then it goes down a lot more. I've seen that so many times, and now all I've seen for the last 15 years is a market that doesn't stop going up, higher and higher and higher. And so it just doesn't make sense to me. The multiples don't make sense to me. Like you'll buy a publicly traded company trading at a 30-to-1 multiple, but if a company was making $1 million a year, would you pay them $30 million? For their company? I don't know. So I think the multiples and stuff for me, that's just what it is. And so when we've come down, I always think we could come down more. I always think there's more to come down. And I still don't think, I think right now maybe we'll try to figure ourselves out, but I still think the market needs, based on how far we've come down, it needs to have a real capitulation selling day. That would be a bottom for me. And we haven't seen that yet. So my bias is going to be towards down until I see otherwise. Like my overall mindset right now is bearish. So, So with your positions, I would ease in. But that doesn't mean I'm bearish right now, today. Overall, macroly speaking, I could see. Yeah. Let me just pull up something real quick. So if we look at, I like looking at the Qs. It just represents the NASDAQ. So it's the same thing, right? So they were as high as 540. We closed at a low yesterday. So here. So we hit a 487 low. I assume at some point that will get retested. We were as high as 540. But if you want to put it into perspective, Like here in March of last year, we were at 433, right? If you
Yeah,
go,
yeah. So the Qs were up 55% in 2023, up 26% last year. That's a
right,
lot.
right. So why couldn't we go down 26% and still be up 50% over the last 3 years? Right. That's how I view it. Like, you know,
Yeah. I come from I take things with I call it the Keith Richards point of
in
view.
November 2023, the Qs were at 340, 350. You know, and by the way, if the Qs got down to 350, the market's still been incredible over this last decade. Incredible. So, you know, I don't have a price target. I don't have anything right now. I think there's more room to the downside. You know, I do think the market will test its lows again, but it couldn't go up before. Like we could go all the way up to 510 on the Qs before we make our way down. But I do still think there's a day where things need a flush. You know, people get margin calls, panic selling, bids falling out. You wake up with everything down a lot. Nobody's even been nervous, right? Nobody feels nervous. I don't hear anyone talking about the market. I haven't walked around town, people saying, oh my God, the market. It hasn't even, that's your best indicator, by the way.
Okay, but I'll play devil's advocate here.
Sure.
When the Qs were at their highs, like around 540, were people asking you about the market then? Like, were people saying, hey, Adam, should I be buying stocks here? Should I be buying NVIDIA?
There was more chatter, but it's people talking about the market is, you're saying like as a reverse indicator, like everyone's buying like during COVID when everyone was trading and then it sells off. No, but usually if you have a real market sell off, eventually it makes its way from CNBC to NBC. Like when the mainstream nightly news is like the markets are down significantly, you know, and you interview a couple people, that's when you start to get near a bottom, you know. But like for a bad down move. So I don't think what we've seen is a bad down move.
Yeah, I agree that there's something different when the New York Times covers it on the cover, or Time magazine, or anything like that.
Right.
Okay, so for your general trading, like, are you purely using charts? Because if you're paying attention to multiples and things like that, I'm wondering if that seeps into your thinking.
If I'm making an investment for the things that I'm going to hold, I care more about the entire story, the fundamentals and the technicals. For anything I'm doing on a 1 day, 2 day, or weekly basis, I only care about the price action of the stock.
Mm-hmm.
Yeah.
Okay, so I think
it does seem, I just want to mention, it does seem like all the crappy stocks, like those like under $10, $20 stocks that have been more speculative, it seems even when we bounce or when the market has an up move, that's not where the money's going. I think it is going to the leaders in that sense. So, you know, I would caution against, you know, looking for those like cheapo stocks that's been working for a couple of years. Like I'm not looking for those now. I know Corey Z, you could argue because it's under 10, but it wasn't under 10 when I started trading it. But a lot of the cheaper stocks that like I thought were fun to trade and were making big moves, I think that's not in play right now. Like if you think the market's going up, you're buying Amazon, Nvidia, Apple. You're not buying, you know, 3D printing for this.
Yeah, I mean, those kind of it is always interesting when these little companies pop up and people act like it's the future. Like we have the quantum computing craze, which lasted for 2.5 weeks. We've had 3D printing, nanotechnology, cannabis about once a year, whatever weird energy technology, nuclear. But I think that stuff also makes the market fun.
Absolutely. Absolutely. I mean, this is a fun market for me. I mean, when you see the moves we've seen this week, I mean, that's as a trader, that's what you wait for. I don't think I maximized. I know I didn't maximize um, the output, but still had a lot of fun and making money with it. You know,
So you like this more than just the steady, like
yeah,
upward trend?
yes. As a trader, as an investor, I'd rather it just goes up every day. Um, but I think it's always more short lived than you think. like sorry. Um, like today doesn't feel exciting, and I don't want like today is probably a day where if you try to chase these moves, you're gonna lose. That's what I've seen. Like you see it's looking strong, you buy, it's probably coming back down. Then you want to buy puts, it's gonna go back up. I do think we're a little bit range bound today. I don't think we're gonna have an extreme move on the close. Um, what's the next major catalyst?
Jobs report on Friday.
Yeah.
But I mean, like the market,
But really, it'd be like a change in the tariffs or something like that.
Yeah. That's exactly what popped to mind, is that we don't even know what it's going to be, because
You could have a huge open if like they announced that Ukraine signed the mineral deal. I think the market sold off during that meeting.
Mhm.
That's
Okay.
that's the fun of a Trump presidency too. Is like he speaks so often and so openly about everything. Like you're like sitting here trading and like world leaders are fighting on CNBC, and you're like, and then in my head I was like, you're like weighing, and I'm like, this isn't a bearish thing. Like I remember I was like, this isn't so bearish.
Yeah. I mean, it is like a once in a lifetime thing that a president is actually running his own Twitter account and not running things by people. So absolutely, like, I mean, the catalyst could be a tweet at 2 a.m.
Right.
And then other countries responding the next day. All right, our good friend Dan Frost is telling us Powell speaks on Friday also.
Yeah.
Okay, all right. I think this is a good time to segue. So, as we mentioned before, so Adam is hosting a webinar this afternoon with the great Tom Sosnoff, who founded Thinkorswim and later Tasty Trade. So what are you guys going to talk about?
So I've learned more about options trading from Tom than anybody else. He's amazing. So he combined his platform Thinkorswim with InvestTools, and then they sold that to Ameritrade for $600 million. And he stayed on there for a while, and then he left and he started Tasty Trade, and he sold that for $1 billion. But what's more incredible is I asked him, and obviously he's going to be worth a significant amount of money because he sold one company for $1 billion and the other for $600 million. I asked him if he has money managers, and he said no. He trades all his own money, and he trades every single day options, and he runs think tanks and studies, and he's obsessed with trading and he loves it. And so we never script anything. It's always like top of the mind. Let's just have a conversation, and we come on and we just hit it. So that's what we're going to do. We're going to talk about the action lately, what he's been doing, how you adjust broken trades. But he's big on collecting premium. And today's a good one. It'll be a good conversation. And then I think everyone has the link for that. But we usually get a really good crowd, good participation. And if you like options trading, it's just nonstop.
Yeah, it sounds like Tom Sosnoff is a guy who's figured it all out. Because if he's made all this money, yet he's waking up and trading options. So
I don't know. I think that's a personal. I don't think anyone would say they figured it all out. And I say that to you as a friend, so you don't think you have it and everyone else has. I don't think anyone has. I think we're all.
Oh, I'm not even. I'm not even I'm not in the neighborhood of
No,
figuring
but
things out.
but what is figuring it out? I don't know. I think you know who I think's figured it out. I'll tell you who. When I look at like who won, my buddy I went to high school with is Howie Roseman, right? He grew up a huge football fan and eventually got his dream job as general manager of the Eagles. And I saw a video of him with a couple of our friends from high school after they won the Super Bowl in the locker room dancing with their arms around each other. And I was like, he's figured it out. It's his passion. It's everything he ever wanted to do. And he's celebrating a Super Bowl the way I would a fantasy football championship. And I was like, that is just freaking awesome. I was like, that's a dream job and a dream celebration. And he had like a cigar in his mouth afterwards. And I'm like, listen, I know. I've spoken to him. Like, I know how stressful. You wouldn't believe how cutthroat the NFL is and how stressful it is. But like, to be at your dream job and winning, by the definition of the word, winning a championship, maybe that's figured out. But who knows? Then you look at someone like that and you're like, okay, but do they miss their kids' games? Like, what about your kids' sporting events? Like for each person, like, define winning. I think the key is just to just try to make sure you're happy every day in whatever you're doing, however you do it. And if you make an effort towards being happy and you work towards being happy, then you're not unhappy, which means you're winning. That's my philosophy.
All right. I think that's a good note to close out. And guys, click the link below.
Did I go too far off the trading path?
No, you can never go too far. We're here to I think one thing that doesn't happen on CNBC, or I would say in most financial TV and webinars, there's very little discussion about actual life.
Right.
Like I will say this, one thing I've observed about the market, a lot of people seem to hate it. Both a lot of traders, a lot of observers we see on social media, a lot of people seem to have this very unhealthy relationship with the market where all they do is complain about Powell's doing this and Elon Musk is doing that. And this is rigged and that's a setup, et cetera, et cetera. And sometimes I think with those people, I'm like, so why are you even involved? If you assume it's all a scam and it's all BS and you're angry all the time, why are you even?
It's the same thing though with everything. Like my son plays tennis, and I was reading something like tennis is a very mental sport. I've seen because you're out there by yourself in singles, and sometimes people are like, "Oh, this ball suck," or "It's too windy," or "The court's messed up," or "I don't like the way he's hitting it." But like the best tennis players don't factor any of that. They just worry about their game and playing their shot, and they don't worry about any of the outside factors because it's very easy to assign blame, but like everyone else is playing under the same conditions. So it's like that with anything, tennis, golf, trading, probably real estate. The laws are unfair, rent control. It's the government. It's not fair. Like whatever you do is fair and unfair. But let me say one thing though. I want to put it out there because it's nice. I am psyched. This is our third call, Mike, or second,
Mm-hmm.
Fourth, third.
Third.
I see the crowd growing. The whole "if you build it, you will come." I saw like a bunch of different people chatting in today. The most we've had, which is fun to see it starting to take legs. So at some point, if we keep it going, which people want us to, I think we need to come up with a name. And so last week you asked me my favorite song to trade to, and what was it? It was the Chumbawamba. What's the thing?
Tub thumping.
Tub thumping?
Yeah, which I don't know. We can work on it. I don't know if we can integrate tub thumping specifically.
That would be a great name for a call. Or Meshflix, you said? That was fun.
Meshflix is possible.
If anyone out there in the comment section has ideas, we'll keep it going for a couple of weeks. But if as you show up, I'd love for you guys to help us name it. Robert said, does Adam do mainly single put call option trades? I do calls, puts. I do a lot credit spreads, diagonal calendars, anything with options. I just never sell naked calls. I will sell naked puts because I'm willing to own a stock, but I won't ever sell a naked call. I never want to wake up seeing a company got bought or something and I just destroyed overnight with infinite losses possible. So never sell naked calls.
Okay. Okay.
I find this to be therapy. Thanks, Mike. I enjoy this.
Yeah. Well, we don't like talking about charts and things, spreads can get exhausting. But I mean, all these things you do in life teach you about life. There are life lessons in all these things.
Yeah. Yeah. But I think for anyone who's getting frustrated, going back to your original question, I just hope that they trade light, smaller. Don't not trade, but trade smaller.
All right. Very good advice, Adam. Thank you very much. And again, guys, click the link below. Free lesson with Adam and Tom Sosnoff this afternoon. Click the link below, and we will see you later. Everybody have a wonderful day.